Quarter 2 of 2026 has completely flipped the script on this dividend growth ETF series. 3 of the 5 ETFs that we track posted double-digit dividend growth quarter over quarter. The reigning champion from the last showdown, SCHD, was not one of them. In fact, SCHD had a negative dividend growth rate in quarter 2. Did it drop the ball enough to lose the dividend crown halfway through 2026? We are going to dive into all the nerdy data in this one to find out. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. If you get value out of this content, then detonate that like button, subscribe if you haven't already, and consider joining the channel membership. It helps keep this section short and sweet. You know what time it is. Let's grow. Quarter 2 Dividend Scorecard. I'm a big fan of dividend investing. And it matters to me to keep a balanced perspective on what's happening each quarter, along with the long-term results. We started this series with my staple dividend growth ETFs of SCHD, VYM, VIG, and DGRO. I was tracking FDVV on the side for a while because it lacked the 10-year history for the standard data polls. But it produced strong enough results that I made an exception and added it to the mix. And I care about 3 primary factors when assessing dividend ETFs. We have the dividend yield, the dividend growth rate, and the long-term total return. In this specific series, we focus on the dividend yield and the dividend growth rate because those are the 2 primary factors that affect your purchasing power in retirement. SCHD stole the crown back from FDVV in our last update, but will it be able to hold on to that crown with the rough start from a dividend perspective that it's gotten off to in 2026? Let's find out. We'll start out here with the ETF dividend growth history spreadsheet. And this one is out there for anyone to see at any time. It's in Excel and Google Sheets form. Link in the description to my videos to see all of my spreadsheets that I use. They're all free. And we'll start here in 2026, quarter 2. This is dynamic, so all the history is on some data tabs that rolls into this summary table. And we look at 2 of our 3 core stats that we care about with dividends, the dividend yield, and then some of the dividend CAGRs, the dividend growth rates here. And then we'll look at the 3rd key metric that we care about, the long-term total return out in seeking alpha after this. Before we dive into this primary dividend growth table, I like to jump down here first to this table with the yearly dividend growth. And this table just has our 5 ETFs listed here, and it shows the streak of how many consecutive years they've increased their dividend payments, how many years they've been around total, and also how many times they have failed to grow their dividends. So for example, SCHD and DGRO have been around for 14 and 11 years respectively, and they've grown their dividends every single year they've existed. So on a per share basis, you've never received fewer dollars from holding SCHD or DGRO than you did the year before. Whereas FDVV on the other extreme only has a 1-year streak. It's existed for 9 years and it's failed to grow its dividends 2 of those 9 years already. And it's had a couple other close calls actually. 78% of the time it has succeeded in growing its dividends, where these other 2 are 100. And then VYM and VIG fall in at 89%. So a very good chance you'll receive more dollars each subsequent year from really all of these, but definitely from the top 2. Okay, and up to our primary table here. It's a bit of a spoiler alert because I'm sorted by the Dividend Power, and we'll get to that in a bit. But what it does is it takes into account the yield and the dividend growth rate, and I'll explain this new formula I use to more accurately crown a king each quarter. So we'll start here with dividend yield, and I'll sort these as we go. From a dividend yield perspective, we have SCHD at 3.28, and FDVV is at 2.86. They're the 2 best yield by a decent margin. And all of these have gotten lower as the price of all of them have increased in 2026. So the current yield, not yield on cost, the one that matters for you and your dollars, depending on when you bought, but the current yield has dropped for all of these. And then VYM comes in at a solid 2.3, and then DGRO right there at 2, and VIG, man, 1.5. That's like VU historically. Now VU is lower right now. It's like 1.07, but this is borderline not even a dividend ETF at this point. It's more of a a cornerstone or a market fund. And then we'll keep moving along here. We go from more short-term stuff to longer and longer dividend growth rates for all of our holdings. We'll start here with the quarter over quarter. And after sorting by this, you can see that FDVV did take the quarter over quarter crown. It increased its dividend in quarter 2 of 2026 by 16.1% over the quarter 2 dividend in 2025. VIG had a very nice increase of nearly 15%. VYM there at 14%. DGRO a disappointing 2%. And SCHD really fell off a cliff on this one, and it actually decreased its dividend quarter over quarter by 3%. Now, if we look at the trailing year, the trailing 12 months, wow, these are all really bad. FDVV is the champion at 5%. DGRO is there at 4%. VYM at 3%. SCHD at 2%. And VIG at 1.75%. They really ladder down pretty smoothly there, but none of them looking great. It's been a rough year and change for the dividend stats of a lot of ETFs in general. When we zoom it out 3 years, we have SCHD and FDVV basically tied at 6.5%. Oh, and throw DGRO in there as well. And then VIG at a little more solid 5% compared to that year anyway. And VYM probably barely beating inflation, if that, at 2.86%. Okay, scooching it out 5 years now. FDVV has a very solid 5-year history of 11.29. That's impressive. VIG is actually number 2 at 8.24. SCHD falls in the middle on this one at 7.5%. DGRO at 7, and VYM still bringing it up the caboose at 4.43%. Now on this 10-year, and I should note FDVV has not been around long enough for the full look back, so you can see here it's an 8-year CAGR for this one, not 10-year. The others are 10. SCHD takes the crown here when we zoom out the most at 10.2%. DGRO at a very solid 9%. And then VIG at 7.3. FDVV at that 5.62 for the 8-year CAGR, and VYM coming in at a steady 5.22%. Now to explain this average CAGR, and you can see FDVV takes the crown of the average CAGR, I averaged the 1, 3, 5, and 10-year CAGRs for this. Now in my opinion, and in any long-term investor's opinion, the 10-year dividend growth rate is much more important than the 1 year, but I also like to keep the series fresh and fun and make the short-term stuff like the 1 and 3 matter instead of just like 10 and lifetime, the ones that really matter over time. But with that said, I just give an equal weight on the 1, 3, 5, and 10 for the average. Quarter over quarter is all over the map. You have plus 30s, minus 30s. It can really skew the data. So I just stick with the 1 through 10 year. And so the average CAGR is the best with FDVV. And SCHD has had this crown for a while, but not right now. At 7.1%, DGRO sneaks in, basically tied, but just gets it by 2/100ths at 6.65 to SCHD's 6.63. And then the VIG average CAGR is 5.5, and the VYM is a pretty low 3.86. Now this Dividend Power one, I'm proud of this one. And you can see SCHD just ekes out FDVV. These two have been battling the last many quarters. But I was tired of robbing SCHD and FDVV of this superior yield. I have to admit, all of you retirement people have gotten me a little more off the dividend growth train. I still love dividend growth, but you have me valuing dividend yield a little more because you got to get that money now. It takes many, many moons for 1.5% to catch a 3.28% on CAGR alone. So what I did here, and I think you math nerds will really appreciate this. Let me hit F2 here. So with SCHD, what I did was I said, SCHD has a 3.28% yield. So I took that divided by the yield of all of these to get the percentage of the yield that belongs to SCHD. And I did the same concept with the average CAGR. So I took, you can see right here, I7, the average CAGR of SCHD divided by the sum of all the CAGRs. So that basically spits out what percent of the yield belongs to SCHD of this crew and what percent of the average CAGR belongs to SCHD. And then it equally weights those. So the yield part is here, the average CAGR is here, and at the end it divides by 0.04. That might not make sense unless you're really into this stuff, but basically these add up to exactly 500%. So of the CAGR and the yield, 125 84.46% belongs to SCHD. It takes that big of a slice of the pie, equally weighting yield with average CAGR. So I'm giving yield some love more than I used to do. And the reason I did the percentage based is, say one of these, I mean, this is unrealistic, but if one of these was like an 8% yield, or if one of these had a 15% average CAGR, it deserves proportional credit instead of just being ranked and doing it evenly via a rank. But that doesn't do justice to like something like this and this that are basically tied, but this would get a 2 and this would get a 3. Instead, I'm properly weighting the exact results into this figure. This is probably way too much information for a lot of people out there, but I made it much more accurate and it reflects the results. And you can see the SCHD is about 25% better than it's supposed to be comparative to the competition. And FDVV is up about 20%. And a lot of that comes at the expense of VIG, which is in last. See, now this one doesn't get away scot-free with the low yield anymore. It used to just add the yield and the average CAGR, so it grossly emphasized the average CAGR compared to the yield. I made them worth proportionally the same now, and VYM even past VIG because it has a better yield advantage than VIG has CAGR advantage. But you can see they're very close. With all that said, SCHD did take the crown over FDVV, but they're still pretty far separated from the competition. And now the last component we have to talk about is the total return. So let's pop out to Seeking Alpha. All right, we're out on Seeking Alpha, my favorite site by far and away to research stocks and ETFs, run all my screens out here, do my portfolio aggregation, work my HODL factory magic, all the above. I love it. I highly recommend it. Link pinned in the comment if you would like to try Seeking Alpha Premium for absolutely free to see if you enjoy it as well. Now we popped out to the charting tab here, and what I have here is almost 10 years of data. You'll see none of these are lit up because I want to look at the long-term results. For example, SCHD is on fire year to date. It's up over 20%, by far and away the most, but I don't care about year-to-date returns. I care about quarterly dividends and what my yield and yield on cost is doing, but total return is a zoomed out activity for me personally in these dividend growth ETFs. And of course, I do care about total return over time, but I'm not going to sweat the small drops. In fact, they're great for accumulation. But what we have here is almost 10 years of data. I pulled from 9/15/2016 because that's when FDVV started. Next quarter, actually, we can just straight up do the 10 years button because we're almost there, but we're 2 months shy of 10 years because of FDVV's lack of history. But you'll notice there's two camps here. The three ETFs here, FDVV, DGRO, and VIG, that are very tech and growth heavy compared to the more value-oriented SCHD and VYM. Now, of course, we're in one of the biggest growth market bull runs in the market's history, one of the top 3 of all time. So it makes sense that the ones that trickle in more growth will have more returns in the last decade. But SCHD actually is pretty good, honestly. With its value tilt and floor protection when growth, like the VGTs and the QQQMs of the world crash, the least weighted overlap, so it's a better counterbalance. And then same concept with VYM, but it's given up more return to have that attribute. So when I look at this, I'm actually really impressed with SCHD, all things considered. But you can see the champion with the bull market is FDVV at 250% to DGRO's 249, and VIG's 243 brings it in 3rd place. SCHD with a 220% gain puts it in 4th, and VYM is at 199.58. Now I did look, I have a little calculator with a formula for compound annual growth rate, total return annualized, and VYM is at 11.6% annualized over the last decade with these figures. That's incredible. That's way better than the market's history over the last 100 years of VU or VTI. I say that just to point out that yes, growth is through the moon. If we pulled up VGT right now, it would be a joke. In fact, I'm going to do it just to make a point. And voila, there it is, 775%. My point of pulling this up is you would look at this and think, well, everyone that does dividend investing are morons. They don't know what's going on. No, that's not true. Over the last 100 years, value is actually better than growth, or it's really close. The bottom line is we are in a huge growth run. one. And these ones capture more of that growth than the last two. They'll look pretty bad compared to a tech ETF like VGT. And even QQQM comes in, not quite as high, but solid. Even with these being terrible by comparison, 11.6% annualized return is the worst one. So we are in an amazing bull market. Stay the course with these things and keep on compounding those dividends, because eventually we will get a reversion to the mean. And of course, own your growth ETFs, your QQQMs, your VU if you want a combo of both, or VGTs, or whatever you like. It's great to keep everything in balance in all markets. All of these are child's play compared to growth in the last decade, but that's okay. And in the greater scheme, it is a bit fluky. We'll see this play out in the coming years and decades. But I always think it's important to keep up with the total returns, so we'll do this zoomed out look every quarter in this series. Bottom line, if you own all these things, if you own assets here right now, you're winning. We should never put all of our eggs in the basket of a single quarter. We need to remember that we need a balanced portfolio in all market conditions. Closing thoughts. I think all 5 of these ETFs can slot nicely into a well-built long-term portfolio, and I wouldn't include them in this series if I felt differently. I personally choose SCHD because of its lack of overlap with VGT and VU, my other core holdings, and its consistent dividend growth, plus the highest yield in the group. It checks all the boxes for my specific mix. But if you already had other higher yielding positions, you might consider adding VIG, FDVV, or DGRO instead. The right answer for you may be completely different than the person sitting next to you. Bottom line, build a well-balanced portfolio and feed that thing in all markets. It stays simple if you stay the course and let compounding work its magic. And speaking of magical beings, I'd like to give a huge thank you to you 36 awesome channel members. Your support of the channel has been incredible, and I appreciate each and every one of you. I look forward to continuing this ride together, and I really do mean it when I say that you inspire me to keep pumping out these videos to help the masses reach financial freedom. That is truly why I'm here. A quick shout out to my primary 2 links, Snowball Analytics and Seeking Alpha. I use and love both. You see them all the time in these videos, and you can try them for free. In the pinned comment, there's a link. If you like what you see, you can continue your subscription at a discounted rate, most importantly, and it helps support this guy because I have received $0 of sponsorship money in the 3 years I've ran this channel. It really does help. I don't like to promo too much, but these are the things I actually use and I actually recommend. Not a money play by me. And check out one of these 2 videos to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you in the next one. Peace.